shots of the opening bells on Wall Street on this Tuesday morning. Orion Properties ringing the bell at the New York Stock Exchange. Northwest getting things underway over at the NASDAQ. The AI trade is stealing the show this morning. Palantir has the hottest ticker page on the Yahoo Finance platform, following the company putting up stellar earnings last night. The CEO, Alex Karp, led play, broke $1 billion in sales in a quarter for the first time. Karp signaled on the earnings call that the AI revolution is just beginning. Eyes now turn to AMD's results after the close today to get another read on all things AI demand. This as investors buy last Friday's dip in the markets ahead of a potential rate cut in September. So lots going on here today. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money I know you have in your portfolio. Let's send it down to Yahoo Finance senior reporter Brooke DePalma at the NASDAQ in Times Square to get a sense of the early action. Brooke.
Good morning, Brian. Certainly, we're seeing all three major indices move slightly in the green this morning. And Mohamed Al-Arian was just on our programming, and what he had said was there are two things that are driving this bounce back, and that is tech and AI as well as FOMO. He said over these past few quarters, what he's seen was that every time investors bought the dip there in the recent few years, that has been profitable. And then in addition to that, we're also seeing tech and AI really drive momentum here, especially when it comes to the NASDAQ. The Dow opening higher this morning, up about a little more than 0.1%. We also have the NASDAQ up just a hair in the early innings here, and the S&P 500 also moving higher. And now I want to take a look at the NASDAQ. I want to see where Palantir is opening this morning. What we've seen from that company is this momentum behind it after the company did in fact announce that they crossed $1 billion in quarterly revenue for the year, and they also hiked their full year guidance. Taking a look at equal weight here as we see the stock now, Palantir, opening up about 8.5% in these early hours of trading here. We also see Micron, Intel, Amazon also gaining some momentum this morning. Google, PayPal also moving higher. And I also want to take a look at the Dow because this is a bit of a different story here. When you take a look at the Dow, we see Caterpillar opening roughly flat this morning. That company warned that tariffs will hit the company's an additional cost of $1.3 to $1.5 billion. And largely what we're hearing is that they're really not able to pass along to the consumer. We're in this sort of environment where consumer spending has pulled back, but definitely a tale of a different story. Intraday trading here, once again, flat. Then again, you have a company that's really focused around AI. You have a company like Palantir opening up more than 8% in these early hours here, now more than 9%. And that's largely what's moving the markets this morning. FOMO and as well as tech and AI. So we'll keep a lookout as we make our way into the trading session today.
Fear of missing out surrounding Wall Street. Brooke, thanks so much. Appreciate it. All right, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, AI strikes again. Palantir cleaned up on business from the government and large companies in the quarter. That helped the software play break $1 billion in sales in a quarter for the first time. Results beat estimates and accelerated from the first quarter. As is typically the case, outspoken Palantir co-founder and CEO Alex Karp took to his soapbox on the earnings call to slam critics and hype up his business.
So thank you for all of our supporters, and we should entertain questions. But this is a once-in-a-generation, truly anomalous quarter, and we're very proud, and we're sorry that our haters are disappointed. But there are many more quarters to be disappointed, and we're working on that too.
Have a great quarter. You can do an earnings call on your T-shirt. Number two, the flip side of Palantir. Investors are digesting more subdued earnings reports out of Caterpillar and Yum Brands this morning, at least relative to Palantir. Caterpillar saw double-digit percentage sales declines in its key construction businesses in North America and Latin America. Meantime, Yum's KFC business posted a 5% same-store sales decline in its U.S. business, continuing a trend of weak fast food results owing to cautious consumers. Number three, betting on rate cuts. Wall Street is urging clients to continue buying any dips in the market as an economic slowdown raises the odds of a September rate cut. San Francisco Fed President Mary Daly adding some fuel to this fire, saying on Monday she is more open to a rate cut given job market softness. My roundtable for today, and it's a really big one, I should say, very large. Angelo Arcocafis, Edward Jones, Senior Investment Strategist, Lou Bazides, founder of thebigskinny.com, and Yahoo Finance Senior Reporters Brooke DePalma and Inez Ferre. Good to see you all. Thanks for hopping up here on this very busy Monday, I should say Tuesday morning. I mean, I'm losing track of this week already. Lou, I want to start with you because Palantir, story of the morning, big quarter out of them. Results accelerated quarter over quarter. Your thoughts on what you saw at Palantir, and what does it mean for the broader AI trade?
Look, I think it's just more of the same of what we saw for the last 2 weeks out of the Mag 7 stocks. I mean, it's really gravity defying how much CapEx is going into AI, and Palantir is capitalizing on that. I mean, if you look at just Amazon, Alphabet, Microsoft, and Meta, they invested $82 or $88 billion in CapEx in the last quarter in just in AI and data infrastructure. And there's no signs of this stopping anytime soon. And I think, you know, everyone always first blush wants to react and say, hey, the spending can't continue. But the reality is that it is continuing. I think the real key bottleneck for AI now becomes energy, not necessarily chip availability. If you remember a couple quarters ago, we were talking about Blackwell's Nvidia chips being available or not. Now it's really going to be, do we have the energy supply to fuel this runaway growth that all of these big tech companies are all too willing to invest in right now?
Well, Lou, do we have the energy? Because I look at these Palantir results, they have accelerated quarter over quarter, beat estimates, big guidance ahead. Can companies like Palantir get the energy they need to feed their results?
So I think you saw in the tie-up, eventually, yes, we're going to find a way to bridge that gap, but it's not immediately available. That's why you saw CoreWeave go out and acquire Core Scientific, because Core had guaranteed power contracts. So again, I think this boom has caught everyone off guard in terms of how fast it's growing, and now you're going to really get into how do you price the energy markets, right? There's going to be runaway demand right now that is probably going to underpin the oil, gas, all types of energy prices, because right now you see China doing it, the US is going to move in that direction. We'll take all forms of energy to power AI. We need it to keep up. This is a national security issue as much as it's a big tech issue. China producing about 10,000 terawatts of electricity each year, and the U.S. has been stagnant at about 4,000 for the last 4 or 5 years. So it's an all-in, all resources at the table for this.
Angela, let me work you in here. Palantir, stratospheric forward price to earnings multiple, big quarter, yes. You have their founder, their co-founder and CEO, Alex Carr, popping on an earnings call, wearing a T-shirt. I mean, zoom out here for a minute. Is just this the ultimate, is this peak Palantir? Is this as good as it could possibly get for a company like this looking out over the next year or two?
When we look at the earnings fundamentals, I think that provides some support to the narrative that unlike the tech bubble, for example, these companies are delivering results. So no doubt valuations are a bit stretched, but at the same time, the fundamental story remains intact. We talk about CapEx spending 70% year over year for some of the 4 of the Magnificent 7 companies. And then, of course, we have to factor into account the interest rate backdrop, and we are back into the bad news for the economy is good news for the markets. Of course, that doesn't mean that we won't possibly experience some consolidation, a potential shakeout, but the broader trend is going to remain higher as earnings continue to grow.
Inez, I should have just did the show in a T-shirt as a show of support for Alex Carr. But really, a remarkable quarter out of that company, sending, I would say, just another signal that all things AI, that trade remains just going in the right direction, in large part because of something Angela just brought up, the fundamentals supported.
No doubt. And I think that what was highlighted through the earnings call were 2 things. One is the growth in government contracts, where you can't really bet against that when the government is spending so much. Also, the other one being their commercial contracts and some of the use cases that were cited with Citibank onboarding customers. It used to take 9 days. It now takes a matter of seconds. With Fannie Mae also decreasing the time to uncover fraud into also a matter of seconds. So these are just some of the use cases that were highlighted, which Wall Street is really happy about. And if you take a look at the stock, I mean, it's up 125% year to date. This is just highlighting that we are at just the first innings, really, of the AI revolution that's happening.
Brooke, on the other end of the spectrum, we have a company that sells 11 herbs and spices and KFC. Same-store sales down in the U.S. Taco Bell, a little squishy. But that just continues the theme of softness we have seen from the consumer, at least through the lens of restaurants. Chipotle, we talked to Starbucks CEO Brian Niccol last week. Their results weren't that great either.
Yeah, absolutely. Definitely a continuation here of what executives are calling this tougher economic backdrop, this softer consumer environment. And we saw that play out in Yum Brands results this morning, as well as Marriott. They're alluding to this slowdown within the U.S. consumer that have impacted their quarterly results. And we saw a decline across key, businesses for Yum Brands, including KFC, including Pizza Hut. But they did see a bit of momentum when it came to their Taco Bell business, but it wasn't as large of a momentum as same-store sales growth as what Wall Street had expected there. We're seeing the stock a bit under pressure this morning after these results, after the company said that this is a consumer that is getting impacted. They're uncertain about what exactly this year will play out, and they're thinking twice about dining out these days.
Also on that cautious side of the spectrum, Angelo, you look at Caterpillar. Solid results out of their energy portion of their portfolio. Of course, they're playing in AI, but when you get right down to it, that core construction business under pressure, what do you do with a stock like that in an environment where you look at Palantir and those results are off the charts?
Well, look, over the last 2 years, we've seen manufacturing PMIs, a proxy for manufacturing activity, being in contraction territory. So it is not as surprising that some parts of the economy beyond AI and all the tailwinds there have been under pressure. And the key here is, as we look forward, to have lower interest rate regime. Once, I think that's going to be the key to unlock some of the potential for areas of the market that have lagged and have been under pressure. So I still think it's more of an interest rate story and global pressures with tariff uncertainty than anything else. But potentially, as we look into 2026, we have to see some signs that interest rates are moving lower, and some of that manufacturing sluggishness that has been in place will resolve itself.
Lou, do sleepy industrial giants like a Caterpillar get you excited at all in this environment?
About as excited as talking about bonds. No, not in this market. But
I don't want to lose all my viewers, Lou. Please don't mention bonds ever again. I can mention Caterpillar. Don't mention bonds.
Listen, I think here's what you got to focus on, and I think it's key, is the undervalued, underweighted sectors in the market. Energy has been one of those, so these industrial giants are levered to that as well. I think as you start getting rate cuts, you see the energy sector, which is trading at about 15 times earnings, the lowest valuation in the sector, and at about a 3.5% weight in the S&P 500, wake up again, because we have recurring and resurging economic growth, not just in the U.S., but on a global level. So that gets me excited, but not Caterpillar. Sorry.
Lou, let me stay with you here. You got the hot hand.
Yeah.
Rate cut potential at the September meeting. How do you bet? I mean, do you even want to bet against a market that is now locked in on the potential for a rate cut in just a few weeks?
No, I wouldn't now. And look, I've been one of those banks aligned with the banks that said there was going to be no rate cuts this year unless the labor market rolled over, and we've seen that. If you look at the 3-month average for non-farm payrolls, it's plummeting since January. So I think Mohamed El-Erian had it right. Definitely 25 basis points in September, possibly, not probably, but possibly 50 basis points for another September to remember for the Fed.
Angelo, your thoughts on that potential for a rate cut? How do you think it will influence markets over the next few weeks? And what point does it get priced in?
Yeah, we didn't see, of course, the Fed cutting rates, but the market has done the job for them. In a sense, markets are leading the Fed right now. And as I mentioned, we talked about broadening market leadership. That possibly cannot happen until we have more clarity and more confidence that the rate cutting cycle will resume. So I think that's going to reflect in the dynamic of Magnificent Seven and AI technology versus everything else. That's going to be the debate that's going to heat up more in 2026. But of course, markets are going to be forward-looking and start to reflect some of that later in the year.
And as this buy the dip mentality back on the street.
It is. I mean, we've seen it yesterday. We are seeing it today as well. Look, earnings have come in strong. Earnings have come in strong, especially for the tech sector, for communication services. And if you take a look across the board, I mean, you mentioned industrials being sort of not that interesting, but they are.
More interesting than bonds, right, Lou? More interesting than bonds.
Right?
Anything
but
is.
They've been the leader, though, for the markets. So, look, there's a lot to be happy about in these markets if you're a long-term investor. So yeah, dip buying means that probably investors think that a rate cut is locked in for September.
Brooke, last word to you. Looking through the prism of all things consumer, we're going to have retail earnings kicking off in a few weeks. Walmart, Target. This is a consumer subsegment. Well, actually, I should say this. The consumer looks like it could use a rate cut here, just to ease the pressure they're seeing. Even when they go down to the shopping aisles, prices are up, tariffs, what have you. You know, they're finding it difficult to make it to the end of the month in many respects.
Yeah, what we're hearing from executives on these earnings calls is that the consumer is extremely price sensitive. They're really looking for value any way they can, and that's ranging from a company like Chipotle all the way to P&G when it comes to their Tide Pods. And so this is really an environment where the consumer is banking on the best price. And so I'm looking forward to hearing from Walmart, Target, McDonald's. That's out before market open on Wednesday. Also keeping a close eye on Lowe's and Home Depot. We know that those are two companies. They're of course, those home improvement retailers that really have been banking on lower interest rates so that consumers, so that, essentially everyone at large can get back in the house market. They could pick up, further than just small DIY projects and really return to shopping for those big ticket items. We know that they continue to pull back when it comes to these high ticket price purchases.
Brooke, you just reminded me I need to pick up some fertilizer for the weekend. I found 5 weeds in my lawn over the week. I'm not a happy camper. I put too much work in that stuff.
Travesty.
All right, it really is. It really is, Brooke, and I appreciate you reminding me. All right, big thank you to Angelo Kokafis, Lou Bazanis, Brooke De Palma, and Inez Ferre. Fire roundtable today. Fire. Straight ahead, Bank of America is staying super bullish on Nvidia ahead of its August 27th earnings release. All the details, and in our Power Players segment, ZoomInfo founder and CEO Henry Schuck stops by following his better-than-expected quarter last night. He also repurchased a ton of stock in the quarter, which caught my attention. We'll be right back. Bank of America getting a jump on its Wall Street competitors, publishing a very bullish note on Nvidia weeks ahead of its August 27th earnings report. Analyst Vivek Arya thinks Nvidia's quarterly sales will easily beat estimates, and third quarter guidance will be upbeat due to Blackwell AI chip demand. If there is a hiccup in the quarter, Arya warns it could come from China, where Nvidia's H20 chip may be subject to potential security probes by Chinese regulators. Never want to see that when you're making a product. Arya's $220 price target assumes about 22% upside in Nvidia's stock from current price levels. All right, ZoomInfo is out with better than expected earnings results with strength amongst larger accounts. Very important there. The company has also hit the buy button on its stock, repurchasing $146.3 million of stock in the second quarter. Wall Street is on two sides of the fence on ZoomInfo this morning. Citi's Tyler Radke keeping a sell rating on the stock, citing competitive concerns. JP Morgan analyst Mark Murphy maintaining an overweight rating, or the equivalent of buy, on the stock, giving the company high marks for better sequential performance. ZoomInfo founder and CEO Henry Schuck joins me now. Henry, always great to get some time with you. You know, we've been talking all morning long about Alex Karp at Palantir commenting on the haters on his company and the stock. Talk to us about Tyler Radke over at Citi. Talk to those haters that are not believers in ZoomInfo. What did you see in the quarter, and what keeps you so optimistic here?
Look, I think, first of all, thank you for having me on, Brian. I think the thing about ZoomInfo today is if you look back sort of 1 year ago, and you look forward from there, we've had multiple beat and raise quarters. We've continued a strategy of moving our business up market. We're releasing new products to our customer base that our customers are engaging and utilizing more than any other products that we've ever released to our customers. Our upmarket business is accelerating, and we're moving resources from our downmarket business to our upmarket business to accelerate that. And so it's kind of a tale of two universes inside of ZoomInfo today. You have this upmarket business that's growing and accelerating, and you have this downmarket business that's shrinking and we're taking some resources from. But ultimately, what we believe is as we continue to move the business up market, today it's 72% of our business that's up market, but as we continue to move it up market, we build a more durable, more profitable business. And if the stock is going to be dislocated from a price perspective, we are big buyers of our stocks. We believe that the price of the stock today is below our intrinsic value, and it's the cheapest, best asset on the market to buy. And so from an M&A perspective, we think the best stock to buy is ZoomInfo, and we've continued to put our money where our mouth is there and continue to buy our stock in the market.
You'll think you'll continue at this buyback pace you did in the second quarter?
In the second quarter, we were aggressive buyers of our stock. We hope to be equally aggressive throughout the balance of the year. We still have $400 million, about $400 million of buyback authorization from our board, and we expect to be aggressive when the price is dislocated this way.
Henry, I don't have to tell you this, but we're smacking the AI revolution. Whatever that might mean, we're right in the middle of it. When you go to get new business or drive renewals at ZoomInfo, what are you selling them right now in terms of AI?
Yeah, great question. So we released about a year ago a product that we call Copilot, ZoomInfo Copilot. That's a product that brings together our customers' first-party data, CRM data, conversation intelligence data, email data, calendar data, and then it marries that to ZoomInfo's third-party data set. ZoomInfo's third-party data is data on 100 million companies, 500 million business professionals, and billions of signals that we're bringing in every day to rank those companies. We're marrying that data together, and then we're using AI to prioritize and rank which accounts, account executives, account managers, SDRs, customer success managers should be engaging with each day. It's AI that's powering, going through all of those signals and all of those companies, and then layering up and prioritizing who you should be engaging with. The second product that we rolled out earlier this quarter is called Go-to-Market Studio. Same concept. Bring all the data together in a data foundation, all of your go-to-market data together, and then build on top of that the ability for go-to-market practitioners to use AI to rank accounts, to build specific messaging for accounts, to leverage all of that first and third-party data to execute really custom campaigns using AI to engage with the right buyers at the right time. I think what we're hearing from the enterprise is they really want to engage with AI and go to market, but they don't know who they should be partnering with. And when we show up, what we're telling them is, look, if you're gonna deliver AI to your go-to-market teams, the first thing you need is a foundational data asset to be able to do that, and it has to have first and third-party data together to execute on top of.
And Henry, it sounds like AI is starting to have a real, I would say, profound impact inside of ZoomInfo. You had this stat on the earnings call last night. You had a team of 25 people. You got that down to 2 people because you rolled out new AI tools. You know, as you look out over the next year, where else will you be deploying AI inside of ZoomInfo, and what does that mean for your workforce?
First, everywhere. We're rolling out AI everywhere across the business. We expect our employees to be AI first. We expect them to understand and know how to leverage AI in everything that they do day to day. And then there are places in the business where AI can do a better job than a human employee, that can deliver better customer experiences, can do that more efficiently for our company. And our job there is to leverage AI to drive that efficiency, to drive better customer experiences, and then to upskill our employees to go do higher value activities throughout our business. But there definitely are, many other heads in this business that are doing things that an AI agent can optimize out. And we're going to be pretty vigilant on driving that usage internally at ZoomInfo.
Lastly, Henry, we've been talking all week so far about the potential for a rate cut in September from the Federal Reserve. As the CEO leading a large company like a ZoomInfo, do you root for a rate cut? I mean, does your business need one? Do you see economic signals in your business that says, yeah, I mean, Jay Powell better get to cutting those rates?
Look, I'm not an economist, but certainly where there is a rate cut, consumers and then businesses in line become more confident about the future of the economy, and they start investing in their businesses. And so to the extent that a rate cut drives confidence and investment back into businesses, I am pro rate cut.
Sound a little bit like an economist there. Maybe a part-time economist. All right.
Maybe part-time.
ZoomInfo founder and CEO Henry Schuck, always good to see you. Good luck this quarter. We'll talk to you soon.
Thank you, Brian.
All right, coming up, Julie Hyman has you for Market Catalyst. She'll serve you up the news behind the market moves. Don't go anywhere.